Hi, this is Zak Mir with the Bulletin Board Heroes on Thursday, the 16th of August here on Share Talk. Starting off with Ascent Resources, which has made good progress since yesterday's update, approaching the 200-day moving average as well at 1.14 pence. It looks like this is a mid-move consolidation breakout heading towards the top of a broadening triangle at 2 pence. Remember the last time we saw a chart like this was on Salvarix, and obviously that did rather well. Hopefully this will do something along the same lines. Weird chart here, which is probably the reason why I haven't looked at this before, but Grand Vision. Basically, we've got a situation where not much data to go on, but the data is that there's been a bear trap below the bear trap rebound rather from below the 20 pence level. That could allow the shares to partially or even fully retest that spike that we saw just a few days ago towards 70 pence. Stop loss obviously back below the 20 pence level for those who want or like such high octane situations. Innovaderma was spotted most recently when it broke out of this triangle formation around the what's that, £1.25 level. Bit of a dance there up towards the 200-day moving average of £1.58. Didn't quite touch that. Might be having a second go now. Nice bounce higher low there above the gap. So one would expect this 200-day line to be hit or even beaten, and then up towards a best-case scenario target as high as 200 pence. Next up, a stock which I haven't looked at too much of late, Marichal Capital. Here we do have, or appear to have, a falling wedge breakout. You had the vertical move higher in December, and then the slow pull back there, just getting rid of the last of the tired bulls, and then back on track in terms of the bullishness there with the break above the 50-day moving average at 1.34 pence. While we're above that, looking for a retest of the main 2.5 to 3 pence area. Ideally, we get a pretty quick push back above the 200-day moving average over the next couple of sessions. That's at 1.71 pence. Chart which looks very good indeed, without wanting to tempt fate, is Maestro. Here we've got what looks like a nice sort of saucer forward slash cup and handle type recovery there, breaking above the 50-day moving average. Never really gone back below that since. Higher low, and then the gap higher over the last week as well. So it looks as though at least while we hold above the 4.75 pence area, top of that gap, we'll have a target here for Maestro as high as 7.5 pence over the next few weeks. So very powerful looking turnaround there for that stock. Tertiary Minerals, a bit of a buzz on Twitter and beyond. At the moment, doesn't look like there's much to crow about, but this sort of sideways consolidation that we've had over the last, let's say, few weeks could be a kind of wedge formation. So we're just waiting for that to break out of that little channel that we have there. And then what's that, sort of around the 0.7 pence area on a weekly close would probably do that. So maybe something to watch out there, especially as if we found support in this zone before in November. Finishing off with a stock which created quite a splash recently with the bull run that it had. Obviously came back rather painfully, VR Education, from the peaks towards 26 pence. Nice gap higher today, end of day close above the 50-day moving average at 19 pence. Could take the shares as high as 30 pence over the next few weeks, but obviously wait for that 50-day moving average trigger. That's it from me. More updates at the same time tomorrow.